Welcome to the Weekly Option, the podcast for people interested in trading stock options. Each week, we cover trade ideas and opportunities in the stock market right now. Whether you're a beginner, a professional, or just curious about options, this is the show for you. Let's get started. Welcome to the Weekly Option. This is episode 363 on February the 21st, 2025. I'm your host, Eric, and in this week's show, we'll cover the trades from last week on Lucid Group, ARK ETF Innovation Trust ETF, and AMC Entertainment Holdings. And we discuss three new trades on Beyond Meat Inc., Intel Corporation, and the Silver Trust ETF. Now, it's always great to hear from listeners. If you have any questions about the trades presented here on the show or even about your own positions, feel free to email me. You can email questions to eric@theweeklyoption.com. That's ERIC@theweeklyoption.com. I've also created a few videos to teach you all the basics of option trading that you'll need to know to be able to follow along with me on this show. You can visit our website and click on the videos tab to watch them, or visit the YouTube channel for the Weekly Option. And the stock market finished the week quite a bit lower after Friday's down move. The Dow Jones Industrial Average fell 1,118 points, closing at 43,428 points. The S&P 500 index lost 101 points, ending the week at 6,013 points. And now it's time for the topic of the week. And the topic of the week is focusing on the process. I've had people email me and ask whether or not I actually trade options or if I just talk about options. So today, I'll make a point by using a very real recent trading outcome. I often trade options that expire on the same day. These are called 0 DTE or 0 days to expiration options. When I see patterns occurring at the same time each day, I will play small trades to see if I can capture these price moves. Now, I bought an out-of-the-money call spread last week for $1.30. It was a $5 spread, so the maximum return was $3.70 or $370. Now, with less than 15 minutes left in the day, the market popped and suddenly my spread was in the money. I could have sold that spread for $3.35, which would have locked in $2.05 of profit. Instead, I wanted the full profit, the full gain, and I thought the market was going to give it to me that day. With 3 minutes left before the close of the day, the stock price dropped and my call spread expired out of the money. I lost not only the profit that I didn't take, but I lost my initial investment of $1.30. On the show, I always stress the importance of locking in profit and minimizing loss. I did not take my own advice that day. Fast forward to this week. I paid $1.05 for a call spread in the same end of day scenario. Once again, the stock price rallied above my strikes. This time, I sold the spread at $3.35. This allowed me to lock in a $2.30 profit. On this day, the stock price continued to rally even higher, and it finished on the highs of the day. I could have captured my maximum gain of $3.95. Now, did I make a mistake? No, I don't believe I did. Sure, I left $1.65 of profit on the table, but I captured $2.30 on a short-term trade. That's a better than 200% return on capital on a short-term trade. If you only look at outcomes, you will always be chasing the wind. If you improve your processes, the outcomes will follow. We don't control outcomes, we only control the process. My process allowed me to walk away with a profit that day. And since that's my goal, I believe I did the right thing. If the market had gone back below my strikes like it had done in the previous days, then there would have been no learning. As long as I walked away keeping a larger portion of the profit that I had earned, I'm happy. Now, I'm sure any of you who trade options regularly have experienced something like this before. Shoot me a note and let me know what you think. Did I do the right thing or the wrong thing? I want to continue to adjust my processes to lock in more and more profit, even if I occasionally leave some money on the table. And we, of course, all have different risk management styles, so yours might be different and that might be right for you. If it's working for you, carry on. Keep doing what works for you. But if not, consider adjusting your process just like I adjusted mine to lock in some profit. All right, so that's it for the topic of the week. We're going to go ahead and discuss the review of last week's trades, which did not show as much profit in week one, which should not surprise any of you given how much the market fell this past week. So we'll start off with the cover call on Lucid Group, symbol L as in Lima, C as in Charlie, I as in India, D as in Delta. At the time, the stock was trading for $3.31 per share. I looked at buying stock and selling the March 3/2 call at 35 cents. That could give us a return of 16.31% in 5 weeks. Well, shares of Lucid Group lost 25 cents, closing at $3.06 on Friday. The call option that we sold lost 14 cents, leaving us with a net loss of 11 cents if we were to close the trade out immediately. Now, the first thing to note is that the stock price is still above our break-even point, so no need to make any adjustments on the trade just yet. Now, you'll hear me say this often on today's show, but we still have 4 weeks until expiration. Even if the trade was crushing it in the first week, I would still look at the time until expiration with a bit of caution. The stock price is likely to continue moving quite a bit in the coming weeks, so just keep track of the stock price and make sure you have a plan for how you're going to make adjustments if you need to in the coming weeks. Next up, we have the credit spread on ARK Innovation Trust ETF, symbol A as in Alpha, R as in Romeo, K as in Kilo, K as in Kilo. At the time, the stock was trading for $67.01 per share. I looked at selling the March 66-65 put spread at 35 cents. That could give us a maximum possible loss of 65 cents per spread. Well, shares of ARK Innovation fell $6.79 per share, closing the week at $60.22. The out-of-the-money put spread that we sold is now in the money, deep in the money by several dollars. We are currently at our full loss amount on this spread, so we're maxed out at the 65-cent loss right now. I always balance out these situations first by thanking myself that I simply sold the spread instead of buying the stock or selling an individual put option. I'm willing to have a capped gain in order to have a capped risk. It would be worthwhile to make an adjustment to this trade. However, the market has moved so much that selling a higher strike call spread doesn't really benefit us much. Plus, once you face the worst possible scenario, you can wait for things to get better. There's still 4 weeks left in this stock, or really in this option trade, for the stock to head higher and for us to possibly make some money on this trade again. So for now, I'm leaning towards waiting on this one as well. And then our final trade from last week is going to be the debit spread on AMC Entertainment Holdings, symbol A as in Alpha, M as in Mike, C as in Charlie. At the time, the stock was trading for $3.56 per share. I looked at buying the March 3/3/2 call spread for 32 cents. That could give us a maximum gain of 18 cents, or we'd be looking at a return of 56.25% in 5 weeks. Well, shares of AMC lost 13 cents, closing the week at $3.43 per share. The in-the-money call spread that we bought is now at the money, meaning the stock price is between the strikes of our spread. The stock price is still above our break-even price, so there's no need to make an adjustment on this trade just yet. Of course, with 4 weeks left before expiration, there's lots of time for this trade to mature into a full-grown profit. Now, I'm happy to let it get there on its own. Definitely will be keeping track of the stock price in the coming weeks. For now, I'm going to wait as well. That's the end of the review of last week's trades. Of course, today was expiration day for monthly options in February. All new trades on today's show will use the March 21st expiration date for monthly options in the month of March. So let's start off with our covered call on Beyond Meat Inc. Symbol B as in Bravo, Y as in Yankee, N as in November, D as in Delta. The stock ended the week at $4.02 per share. I'm looking at buying that stock and selling the March 5 call at 21 cents, hoping for a return of 29.6% in 4 weeks. Now you enter this trade by buying stock for $4.02 and selling the March 5 call at 21 cents. This trade makes the most money if stock prices finish above $5 per share. The break-even price on this trade is $3.81. In real terms, the stock price will require $402, and you'll collect $21 for selling the option. Next up, we have a credit spread on Intel Corporation, symbol I as in India, N as in November, T as in Tango, C as in Charlie. The stock ended the week at $24.87 per share. I'm looking at selling the March 24-23 put spread at 36 cents. That could give us a maximum possible loss of 64 cents per spread over the next 4 weeks. Now you enter this trade by selling the March 24 put at $1.10 and concurrently buying the March 23 put for 74 cents. This is a credit spread because we're selling the spread, and this trade makes the most money if stock prices expire above $24 per share. The break-even price is $23.64 per share. In real terms, you'll receive $36 per spread that you sell and still have $64 at risk. Our final trade on today's show is a debit spread on the Silver Trust ETF, symbol S as in Sierra, L as in Lima, V as in Victor. The stock ended the week at $29.61 per share. I'm looking at buying the March 29.5 call spread for 32 cents. That could give us a maximum gain of 18 cents, or that's a 56.25% return in 4 weeks. Now you enter this trade by buying the March 29 call for $1.12 and concurrently selling the March 29 half call at 88 cents. This is a debit spread because we're buying the spread, and this trade makes the most money if stock prices expire above $29.50 per share. The break-even price is $29.32 per share. In real terms, you'll pay $32 to enter the spread, and your maximum gain is $18 per spread. So that's it for this week's show. Thank you guys so much for listening. Thanks for the emails. You guys have been asking some good questions. I just really appreciate you following along with me on this journey. If you have any additional questions, shoot me a note. If you'd like to learn more about option coaching and you want to get better at your own trading, or even learn to incorporate a few new styles of trading into your repertoire, feel free to shoot me an email as well. We can have a phone call and see if it makes sense for you. All right. So have a great weekend. And as always, happy trading. Thank you for listening to the Weekly Option Podcast. Please subscribe to our show and visit us at www.theweeklyoption.com. Disclaimer: there is a very high degree of risk involved in trading. The indicators and strategies described in this podcast are for educational purposes only and should not be construed as investment advice. For our full disclaimer, visit our website at www.theweeklyoption.com.